All right, let's start. Good afternoon. Welcome to 25 Minutes with Cap, where each month we're discussing recent trends in the specialty insurance space. Today, I'm excited to have Bill McConnell joining us. Bill's a co-founder and the chairman of the board of Vertex Companies, an international AEC firm. He's a seasoned expert witness for domestic and international mega project disputes. Bill, thanks for joining us.
Hey, thanks for having me. Glad to be here.
Sure. So as we go on from here, if you have questions through the session, feel free to enter them into the chat and we'll do our best to answer them. And just a reminder, the content of this webinar is the property of CapSpecialty and it's for informational purposes only. You're not permitted to republish, share, or quote from this webinar without the prior written consent of CapSpecialty, which could be obtained by contacting marketing@capspecialty.com. So, Bill, the first question we always ask people is, how'd you get into the business?
Well, in terms of construction and engineering, I knew when I was about 12 exactly what I wanted to do. I grew up in a construction family. My dad was a bricklayer in Boston, and so I went directly into civil engineering undergraduate degree. And when I graduated, worked for a large general contractor in Boston. And within 24 months thereafter, I started Vertex about 30 some years ago, and been building ever since.
And you kind of quickly went to work at AIG after the contract.
That's exactly right. It got me into the surety business. I was working for the general contractor. Our precaster went out of business. We were building a modular precast prison, and I worked with them 24/7 to get the work done in a timely manner. And then right after that concluded, they asked me to come down to New York and work as their consultant for all of their jobs where there was performance bond claims.
Awesome. So, talking about a $2 trillion construction industry, we've got 25 minutes. Where's the first place we should start?
Yeah, I'd say perhaps we can talk a little bit about the macroeconomic side of the construction industry right now. We're in a really strange time. We're coming off of 2023, which was the fastest growth year we've seen in the construction industry, up nearly 14% since the Census Bureau has been tracking data since 2003. So it was an absolute banner year. Now, with that, it was a little bit of a different type of year because we had booming manufacturing, booming public construction. Private construction was settling back a little bit, but still pretty strong. And it's so we're if there was going to be mean reversion, this would be the year, because generally speaking, over the past 20 years, construction outperforms CPI or outperforms inflation by about 1%. Now, it was nearly 11%. It beat it last year. So we're probably going to have some like manufacturing that are going to settle back in. And that's what we're seeing right now through the first couple months of the year. In fact, the latest data is February 24, and 16 of the 17 sectors have pulled back on a month-over-month basis. So of the $2.1 trillion that in construction revenue that was recorded last year, it's actually dipped below that mark on an annualized basis. So it actually shows the industry slowing a little bit. And we're also seeing that in construction backlogs, which generally on a good year, they're about 9 months, and it's dipped back below that. And in fact, it's almost in the 7-month range, which can be a little bit problematic. And so it's not surprising though, because all the while we've had these inflationary pressures, we've had these rate hikes, we've had 500 basis points of hikes, and contractors have to deal with that. So we are seeing some frequency in the claim side as well.
Is there anything in particular around the 16 of 17 declining that you're surprised by?
No, it's not, only because it was such a grand year last year. Really, the only one that showed a very minor growth, pretty much flat growth, was Resi. And then everything else, 16 sectors, shrinking and compressing slightly. I don't see it all that surprising, only because when you see backlogs coming down, we have about 800 or 900 people that work at Vertex, and we have several divisions that work on the front end of engineering and environmental due diligence work for developers. And we actually see them picking up a little bit, but for the past year or so, they really put their pencils down and did very little work. So it was fiscal stimulus that propped up the public markets that really helped the industry as a whole. But I'm not all that surprised to see a little bit of compression after such a banner year. And we have, we're still seeing sticky inflation, which is going to be a problem for growth moving forward because Chair Powell, he's going to cut rates once we see slow growth. So he's still seeing growth, he's still seeing full employment, and he's still seeing inflation. So it's higher for longer strategy. That's going to mitigate growth moving forward. If there is a slowdown or a sudden slowdown, then you'd probably see rate cuts, and you still have a yield curve that's been inverted for 2 years. It's crazy. It's an atypical environment right now. And I think when you harken back to 2022, here's a year where we had 2 consecutive quarters of negative growth. You had an equities market that dropped by 20%. So for all intents, that was a recessionary cycle, but the shoe didn't drop unemployment. So you had low, sub 4% unemployment through this time. So the National Bureau of Economic Research didn't categorize it as a recession really. But Adam, in terms of where we stand in construction claims, it was kind of a recession based on the frequency we're seeing right now.
Talk a little bit more about that. What do you mean that in terms of construction claims?
So construction failure generally peaks 1 or 2 years after a recessionary cycle. And we can go back and look at the numbers from the mid 80s, the mid 90s after the early 90s recession, the early 2000s after the 01 recession, early 2010s after 08. So usually there's about a 24-month lag between the cessation of a recession and peak loss and peak failure for contractors. And the reason that is because contractors fail not because of the recession itself. It's generally the work they take on during a recession. So they'll die for the work. They see a drop in backlog. They want to die for the work. They narrow their margins. There's still inflationary pressures. And then that catches up to them. And so what we're seeing now is we are seeing some higher severity and definitely high frequency claims on just the contracting side. And in terms of construction defect construction, there's been so much resi construction that's been built over the past 10 years. And you have statute of reposes that are, 5 to 10 years generally per state. And so we're seeing a massive, continued trend on that side. But for contractors themselves and the financial health of contractors, they're running into that problem. You have owners that their margins are being squeezed on pro formas. They don't have the extra cash to pay claims. Dispute resolution is being triggered, but sometimes it takes 2 to 3 years to resolve, whether it's in ARB or a court or mediation. So it's a problem.
So definitely you've seen frequency of severity, particularly with the failures and the surety losses. Is this, but back to your other points, is this cyclical, or
Yes.
you think there's not anything more concerning? You think this is just,
Yeah, I think it's the former. And the reason why I say that is because I think the reaction in the surety industry is following the trend like 2022 was a problem. I mean, we had a fake recession in 20, basically. It was a shortest recession ever. So you could argue that that may have had an impact as well, but you had fiscal policy that helped mitigate any problems there. But really 22, as I saw, is the big problem. You had construction costs, PPI for construction materials up higher than they've ever been. And contractors that have these contracts they signed in 2019 and 20 are then stuck unless they can work things out with the project owners. So it's really I think it is a little bit cyclical, with the large footnote that we still have full employment, we still have an inverted yield curve, we don't have a named recession, But I think it is the cycle it's following right now is the traditional post the mid 80s or mid 90s, mid 2000s, early 2010 type cycle. It's almost flowing. That pattern is very similar right now.
You think it's going to continue to be worse
I think
in
it's,
this cycle?
yeah, I don't, we haven't had a major loss cycle since the early 2000s where loss ratios hit 70%. Really, the industry managed the great financial crisis unscathed for the most part. I mean, we hit 40% one year, but I think I get the sense, my gut tells me it's a minor loss cycle. I think we may hit, 40% loss ratios or something like that for a year or two. But I'm pretty bullish actually about the market moving forward, because once we get through this cycle, usually there's 5 to 10 years of bull runs in the surety industry, low losses, high margins. And so long as inflation is the killer of contractors, it's almost impossible to avoid inflation. That's why I go back to the cycle as well. When you look at all of those historic cycles, you had peak inflation, slowing economy, recession, construction losses. Here, we're just kind of missing that recession piece, but we had the massive inflation, and here we are a couple of years later, contractors paying the price for it a bit.
You talked a little bit, or you mentioned construction defect before, and this has been a major concern of the insurance industry. It has been for a few years. Is risk mitigation getting better? Is there a higher floor now, or is it still it's still just the same?
What's frustrating for me is that it's more of the same. We've worked on thousands of CD matters over the last 20, 30 years. And I'd have to tell you that the complaints that we see are rinse and repeat. So we have the same issues coming up time and time again, building envelope related, flashings above windows, flashings at the base of the walls, isolation joints, roof issues predominantly related to flashing, balcony integration. When we get into the interior of the building, it's generally fire rated assemblies is the new theme. So that I would say that's a newer theme, but then, but we see basically a rinse and repeat from
Hey,
complaint.
by the way, what's a fire rated assembly?
Oh, so that's a partition wall in a multifamily construction. Say it's a 2-hour wall, and you need this separation wall follows a UL assembly, and it has to be perfectly constructed. So what's happening now is plaintiffs will come in, they'll do destructive testing, and they'll compare the UL assembly detail against what's built. And oftentimes they'll say, oh, the airspace is not a ½ inch, or there's a metal clip that's touching wood, and there's the separation between the walls itself or a problem. So you have to rip out all the kitchens, all the kitchen cabinets. You got to get in there and rebuild this wall, and it's very costly. So that's been the latest trend over the last couple of years. But we're seeing what's frustrating for me is in the 90s, it was weather resistant barrier. The Tyvek that was installed on the exterior sheathing of the building, it had to be positively lapped. And the windows had to be integrated with the weather resistant barrier. That was a big problem for many years. Builders have really caught up to that. They're doing a nice job there for all intents. But these other issues, the detail work, we're not seeing it. And it may be because builders get these claims 2 or 3 years after substantial completion. They're long gone. Insurance is kind of handling it at that point. And the lessons learned is not necessarily going back to the general contractors and the subcontractors that are being sued for these issues.
Oh, that's interesting. And so there's really, so I mean, how do you get people? You just don't feel like it's going to change.
It hasn't changed much in a very long time. So I see one of the answers actually being with the insurance community and with the broker community, and basically being thought leaders and saying, okay, here's 300 CD cases in this area that we know have been involved with. Let's get with the attorneys the CD attorneys, let's get with the experts and let's do a lessons learned and let's broadcast this, or let's do a program a week or a program a month or a couple a year and say, here's the greatest hits. Here's the CD greatest hits and how do we prevent them? And it needs to ripple through, and maybe GCs request their key subcontractors to participate in these communications as well, because it needs to be embraced up and down the chain of contractors. And I think if they were to embrace that and they were to see these details, quality would eventually improve. But until then, we're seeing, again, over and over again, the same issues happen.
Now, earlier in the life cycle of the project, you have issues of, injuries on the job site, so on and so forth, and you're seeing, concerns about whether you call it social inflation, legal system abuse, whatever. Is it a little bit different there? Are you seeing behavior change on the job site, or building strategy in general, or is it similar to what you're seeing with CD?
On the safety side, I've seen a massive improvement in cultures of safety that are being formed, that have been formed over the last 2 decades. I mean, there's way more attention now than there's ever been on safety. It's being embraced by companies top to bottom. And in terms of the inflation, however, I mean, our health insurance went up, I don't know, workers' comp health insurance, maybe $500,000 this year. I mean, that's a decent sized ticket for us. And I think we are seeing that chip away at margin. And then that's translating to maybe bumping up your fees, trying to cover some of this in a fee structure, in the services that you're offering. So it's an interesting time in terms of social inflation. And then you have weather events, cat events that were the exception. Now they're the norm in many states.
Sure.
So we're seeing these weather events that, you have to deploy a catastrophic team to do the engineering on all these structures that have been damaged. And now we would have them every 4 years. Now it's like, all right, it's August. Where are we going this year?
Right.
So that's really impacting, I think, premium for sure.
You hear a lot about larger, more sophisticated builders.
Yeah.
They bring in quality assurance, quality control. Are there different levels of QA, QC? How helpful or effective are they?
Yeah, it's on some of the larger jobs and some public jobs, they prescribe in the specifications requirements for QA, QC personnel, safety personnel. And a lot of times companies just focus on, hey, they're going to take a look at specifications, details, like catching problems in the field. I think what's most effective is kind of what I mentioned before about that safety culture that the industry has embraced over the years. It's really, how do we do that in the construction industry? How does a project engineer understand that there needs to be 3/8 of an inch gap between your metal flashing and then your stucco above it or your siding above it? What are the hardy details? How do we properly integrate a balcony? And if everyone understands these issues will be caught quickly. The problem happens when you build all of your masonry walls in a project and then you discover that your weep holes at the base of the walls aren't at 24 inches on center or 36 inches on center. Then it costs so much money to fix. And then it's an us versus them. It's us against the owner's quality control agent that's pointing a finger at us. If you catch these early, it's really going to be great for everyone, including the subcontractors, because it's going to cost them less money. Now, what I think about AI is that the AI trends these days, it's like, how is it going to make builders more efficient? I don't see it making builders more efficient. I see it helping owners to identify non-conformance and non-compliance issues, because all of the new technologies are filming and mapping out and taking a video of what's in site, comparing it against the contract drawings, see if there's compliance. So it may actually work to help contractors to catch mistakes early. And so you
How much,
don't have these big claims later against carriers.
how much adoption are you seeing of that now?
Not much, except for the larger companies, but you have 3 or 4 programs that are in their infancy, open space and certain others that actually some of them have been funded by large contractors, where you put the camera on your hard hat, you walk around, and it's basically comparing what it
Mm,
sees against the BIM drawings and figuring out not only percent complete, but where there's non-conformance. And then you're going to have drones flying throughout buildings throughout the night to see if the stud bays are at 16 inches on center or more. Again, it could be a problem initially for contractors, but I see it as a massive benefit for carriers, because you're going to have you're going to have conformance with the contract documents. And if there's not conformance, you're going to have, you know, projects being shut down until there is conformance. If you go to the building envelope and the weather resistant barrier, the flashing's wrong, you know, there's likely going to be something that catches that more readily now during construction, rather than 5 years after the fact. And there's going to be a filming of compliant work. So if you're a carrier or a contractor, you can say, oh, no, we properly flashed these windows. Here's a video of every window that was flashed properly. Here you go.
I mean, how far away are we from doing that widespread? That sounds pretty sophisticated.
Yeah, I don't think it's that far. I think technology exists right now to do that. The problem is it will be measuring against the existing contract drawings. And if they don't have the integration
Right.
details specifically defined within the plans, you know, the AI is not going to work. It's garbage in, garbage out. But I see in 5 years that quality control is going to be a whole different game. You're not going to be going, you know, you're going to have drones flying around the buildings and figuring out what's what, are things compliant, which again, maybe it makes construction a little bit less efficient, but that's okay because it will be
Overall better.
properly installed. And then you would think that these CD litigation issues may actually, you know, may be mitigated at that point.
So you've been in and around the industry for a little bit. What's different about the industry now versus when you started that
So
we
it's
haven't
certainly,
talked about?
yeah. And I entered the industry in earnest in the 90s. It's gone from a paper industry to a digitized industry. That's number one. Number two is the project delivery techniques have evolved. It used to be stipulated sum. AIA 101 contract form was the most popular contract form. It says, here's $50 million. I'm going to build this building for you. Now it's CM at risk, where you say, hey, I'm going to charge you, rather than bidding it for 15% margin, I'm going to give it to you for 5%, but I'm going to do all my buyout. And it's going to be really cost plus until a point in time where I can give you a guaranteed maximum price. So just about every building project is CM at risk right now. So that's been a big shift. And then we've had an evolution of the design build project delivery strategy, which has evolved over time. And now it's somewhat mainstream. But certainly digitization has been the biggest change. I mean, the paper that was generated to build a construction project back in the 90s versus what's required today, no one, you know, very little paper is generated anywhere.
So last question here. As you look out at the next 5 years, thinking about the surety business, the insurance business, give us a prediction or two.
Yeah, I think we will see. I think we're in the midst of a loss cycle, and you know, there's a loss cycle every 5 to 10 years, at least on the surety side. I think we're in the midst of one now, and then usually there's smooth sailing thereafter. So 5 years out from now, I see smooth sailing. In terms of insurance, I do see very sophisticated plaintiff bar, sophisticated experts that are making claims, and I think that will continue for the near future. However, I do think AI is really going to help contractors and carriers build buildings that are in perfect compliance. I think being a designer may be a different story. Maybe professional liability could still be a little bit of an issue because everything's going to hinge on design. So being compliant with your design is going to be important. But I think it's actually going to help builders. I don't think it's going to have a huge impact on replacing people in terms of building buildings. I don't think that's really going to happen in the near future. But in terms of compliant construction, I think it'll help greatly.
Well, hey, Bill, this has been really great. I really appreciate the help and really
Hey,
appreciate you joining this.
you got it. Thanks for having me. Pleasure.
Hey, thanks. All right. Thank you all for joining.